Now, Michael Yoshikami is President and Chief Investment Strategist at YCMNet Advisors. He helps oversee about $1 billion in assets, and he joins us from San Francisco. And Michael, talking with Ira just now about the Fed meeting tomorrow, it is kind of a big deal. And of course, people do have different opinions on what happens with quantitative easing from here, what happens with interest rates. What do you base your buying and selling, your trading on here? What do you expect the Fed to do?
Well, first of all, I expect the Fed to continue to talk about how the economy is soft. They're going to certainly bring up the housing numbers that came out today as an indication of how interest rates need to stay low. And it probably makes sense if you think about it. If housing sales are falling and interest rates are still low, you can only imagine what higher interest rates will do to housing sales when interest rates go up. So from an investment perspective, we believe interest rates are going to remain low probably through the course of this year. Even though inflation fears are building, we just don't think it's time. We don't think the Fed's going to do anything to suggest interest rates are going to go up. Quantitative easing will likely end in June, but I think the Fed is still going to talk rates down.
So bottom line, Michael, you don't think that the end of QE2 is going to have much of a big impact. Some other guys come on and they say it is going to have a big impact. It's really been boosting up pick your asset class. But bottom line, you don't think it's going to have a big impact.
Bottom line, I don't. I think that what you're going to continue to see is the benefits of QE2, or the tailwinds of QE2, plus the deficit tax reductions that were passed last year. Remember, third year of a presidential cycle. In all likelihood, the politicians are going to do everything they possibly can to make voters happy. I think that's going to carry on. But the ominous issue we have to really worry about, Carol, is we do have high unemployment. We do have falling real estate prices. That's going to be more problematic for next year. For this year, I'm not so concerned.
Let me bring in Julie here because she is going to talk about tech in general. I thought IBM, and Michael owns IBM shares, so I want to talk to him about that. But Jules, you're going to look at actually other tech.
Well, we can talk about both. I mean, IBM, as we've been talking about today, raised its dividend, raised its buyback authorization. The shares rallied to a record. And if you look at tech generally, I mean, IBM's been a standout within tech. But if you look at tech generally, the S&P 500 tech index, you can see for the year to date, it's up about 5.6%. But that's actually in the middle of the pack. So what I kind of wanted to ask Michael here is, if we've seen all these strong tech earnings that we've gotten thus far, which by and large have been strong, IBM included, and then you have them returning cash to shareholders, and you only have the group up less than 6%, I mean, what is it going to take to see more of a rally?
Well, I think what you have to recognize is when you say tech, you're lumping a lot of companies that have had pretty difficult performance. If you're lumping in companies like Microsoft, Hewlett-Packard, Cisco. So there are a number of tech companies that really have not done that well. For every IBM, and we have been a big buyer of IBM for quite a long period of time because we do believe they're going to continue to capture market share, grow globally, and we do believe they're going to have very, very strong share repurchase. We think that you have to be selective in tech. And so I think for people to just go out and buy tech as if everything technology-oriented is going to go up, I think that's a mistake. I think you have to be selective.
Why did you like IBM? I mean, in hindsight, it's obvious. But what were your first signs, and when did you get in? How much did you buy? What's the story with your investment there? So from an IBM perspective, we've owned it for several years. We've always felt that IBM would be a name that would continue to capture market share because of their services business. As you know, they aren't really in PCs anymore. They're essentially in high-margin services business. And that services business is really going to drive results as companies seek to become more efficient. Not just companies in the United States, but companies internationally as well. It's a global marketplace. I'm in Asia on a fairly regular basis. Last time I was in Asia, I talked to many executives that think IBM is doing a great job in terms of reaching out all across the world and helping companies be more effective. So we think IBM is still an intact story, and those are the kind of names I think investors should chase.
So I think I can answer this, Michael, but it sounds like you're pretty comfortable with them spending a lot of their cash on doing buybacks and issuing higher dividends or increasing their dividends.
Yeah, I would be less comfortable if they issued all of the money out in dividends. I would rather have share repurchase so it can help existing shareholders. But I think it does make a lot of sense to pour some of that money out to investors who have been rewarded hanging on this stock when it had some trouble 2 or 3 years ago. So, yeah, we like the moves today. We think it's the right direction.
What I'd love to do, though, Michael, is go back to something you said about housing, because we did get a read on housing today. Dom, I want to bring you back into this because we did see some more weakness in the housing market. We're going to be talking with with Carl Case and Bob Schiller in a moment, but why don't you walk us through, Dom, what we got today?
All right, the headline number, down 3.3%. That's the read there. But more importantly, check out this chart because it's the home price index. That's the telling tale here, because if you look at that chart, what you see there is a decline in home prices to below that 140 level. The reason why that's important, guys, you see that big dip in the middle there, that was the depths of the financial crisis. And right now, we're heading back in terms of home prices towards the depths of the financial crisis. So I guess the question at this point is, basically what happens is, if you look at what's happening, Mike, is this a situation where this rally could be fake in the stock market? If home prices keep on continuing to fall, is there an end in sight, Mike?
I don't think the rally's fake. I do think the rally's going to lose steam next year when the reality of home prices catches up to it, as well as high unemployment. We talk about it's heading towards the depths of the financial crisis. I frankly don't see how it cannot go there. If you have so many properties in foreclosure, you have massive amounts of people that want to sell their house but can't get the price they want, all in an environment where interest rates have never been lower. I just don't see where the stimulus is for the housing market. So when you see these numbers that housing sales are up 10% or up 12%, I think you have to look below those numbers and realize housing market is still struggling. I think that Kay Schiller will actually talk about that later on this program.
Let me just break in here, Michael, because we're seeing Amazon.com forecasting operating income of between $95 and $245 million in the second quarter. Analysts on the street were looking for more like $370 million. Sheila, this is going to no doubt be a disappointment.
Yeah, and Matt, to run through the numbers quickly, let's start off with sales because that was not a disappointment. Sales for Amazon coming in much higher than expected, $9.86 billion, so handily beating estimates of $9.54 billion. To put that in perspective, that is about a 40% growth rate year over year. Now, where they did disappoint, though, was on the earnings basis. On a GAAP basis, they had earnings of 44 cents a share. That is well below what the street was expecting. The street was expecting about 61 cents a share. Now, you talked about guidance a bit. Well, guidance there was disappointing again on the operating income basis. They are estimating $95 to $245 million. The street was actually expecting above $300 million. Also, though, sales for second quarter is coming in higher than expected, $8.85 to $9.65 billion. That is higher. So the same story is playing out again with Amazon in terms of lots of pressure on that operating income and on that profit line as the company continues to reinvest into their growth prospects. I'm going to continue to go through this to pick out some more details, but big picture headline, beat on the revenue side, miss on the EPS side, pressure on margins. Guys, back to you.
Excellent. Sheila, thanks very much. We'll continue talking Amazon. I want to thank Michael Yoshikami out there from YCMNet Advisors joining us from San Francisco. We're going to